A very strong auction market there, Doc. And we're seeing Melbourne having its post-breakup glow, but Adelaide smashing it with an 83.7% clearance rate. Should we be calling you a little quiet overachiever of the property market?
Well, it's been a little strange, Rachel, because Adelaide, as we discussed last year, was very, very strong, 80% plus clearance rates through the first part of the year. Then it fell away quite sharply, the Adelaide market. And it was like that affordability thing that we discussed, because it had reached its affordability peaks because such strong price growth, such strong clearance rates in Adelaide. It was well ahead of all the other auction markets during that period. It did fall away, and it fell away at the beginning of the year as well. It was sort of so-so. But over the last month, it has picked up significantly, and now it's back to where it was 18 months ago as being that ultra-strong, uber-strong boom time market, and it's clearly a boom time market in Adelaide.
Money isn't the root of all evil, the fucking lack of it is.
Not money, the lack of understanding money.
When I put that into emphasis, when I realised that psychological effect and how it hit our family, I FTB all the fucking way.
You are now watching the Money Mentor podcast
With Graham Home.
Graham Home.
Welcome back to this week's episode of Wilson Weekly on the Money Mentor podcast, where housing prices rise faster than my award nominations and auction clearance rates are the new weekend sport. I'm your finance strategist, Rachael Howlett, and with me is the economist who makes graphs sound like gossip, Dr. Andrew Wilson. Today we are diving into home prices, the RBA's latest bold move, and why even AFL finals can't stop auctions from running hot. And let's start with who you've got for the NRL Grand Final.
Well, I don't want to. I'll just sit on the fence, Rachel. So you can pick for me.
Because you were wrong last week.
Yeah, I was.
You were wrong last week.
Yeah, I know. But anyway, whatever. But I'm never wrong in the housing market, and that's what counts, isn't it? Because we're talking serious dollars there. And this week, of course, hot off the press, we've got the latest information on house prices, and we're all obsessed with house prices, aren't we, Rachel? More good news. We won't call it a boom just yet, but gee, we're right on the cusp of calling it a boom. Maybe it's a BB. It's a Brisbane boom in line with that grand final victory in the AFL last week. They've got a big victory with house prices yet again with Brisbane. It gets a bit tiresome, doesn't it? But not if you're a home owner in Brisbane, unit or a house. They're both skyrocketing in terms of prices growth, and we'll reveal all that this week. Happy October, Rachel. October. Can you believe we're into October? We say it every week how the year is flying, but what's gone? It's nearly gone. Forget it. See you later. Only one more RBA meeting for the year, I think. And, certainly not a lot. And we've just had the latest meeting, the September meeting, end of September, and we'll report on that as well. Of course, interest rates have been an important part of why we are seeing strong house price growth and unit price growth in our markets. And some interesting factors sort of come a little bit out of left field in terms of what's happening with the prospect for lower interest rates. We'll discuss that as well. And as you said, Rachel, nothing can slow down our red-hot auction market with even the AFL Grand Final producing, with hardly any listings, still producing strong results as buyers just climb out all over each other, trying to secure property. But that's the Australian way, isn't it, Rachel? Buyers climbing all over each other to secure property. So enough of the frivolity and enough of the sports talk. Let's get on with the real business today. And My Housing Market presents every week our podcast in conjunction with the good folks at Infinity. I've lost count, Rachel. I think we're up around 150 now. That's pretty good. There's maybe more, but we're here to bring you all the latest news on the housing market, current states, future prospects of housing markets, not just prices and rents. We also bring you all that underlying, all the issues with the underlying drivers, such as interest rates. And Rachel and I like to have a chat about just exactly what's happening and why every week with the housing market and its factors. And of course, you want to have that sort of information, real-time information, if you're making a decision in regard to buying or selling or investing in property. So going forward, let's get started. Busy week this week, important week 2, Wednesday, October the 1st, just 3 months left till the end of the year. I guess we're all getting ready or planning and thinking about our summer holidays, are we not? That's our close. Well, maybe we are. But summer will be nice. It's been a bit of a funny winter, I guess. But I think everybody's been coming down with the bugs, the flus, the colds, everything over the last month or so. Rachel and I are no exception to that. So I hope you're all recovered. And we've got lots of interesting news today. September home prices, again, reinforcing just how strong our housing markets are. The latest RBA interest rate decision, as I mentioned, a few surprises there. Not a surprise with the actual result in terms of the actual decision, but the RBA is just changing its tune a little bit, Rachel, in terms of the commentary.
Yep.
We'll discuss that. And the latest, as usual, weekly auction results. We like to focus on the auction results because they certainly are a reliable forward indicator of what's happening in our housing markets, the underlying activity in our housing markets. And you should be following those weekly auction results to understand what's happening in your local housing market, capital city housing market. So let's have a look at the latest home prices, Rachel. No surprise that lower interest rates have driven September home prices higher. All capital cities, with the exception of one, reported higher growth over the September quarter. What we do here is we measure quarterly house price growth. That is, we take the number of sales reported over a 3-month period, and then we compare the results, which we model in terms of prices growth, to what happened over the previous 3 months to the month. So it's the September quarter versus the August quarter, Rachel. So it gives us lots of observations. So it's reliable. The actual underlying activity levels are high enough to get a reliable result, but we see that underlying trend comparing it month by month by month. So it's a very positive and robust indicator of housing market activity. And of course, rise and rise and rise from those 3 interest rate cuts we've had this year, February, May, and a follow-up in August. Plenty of momentum there in an undersupplied housing market. Lots of confidence. We're maybe just getting a real sense of FOMO coming into the market, Rachel, fear of missing out, that buyers are now starting to think, well, gee whiz, if I don't secure property now, I'm going to have to pay X amount of dollars more maybe next week, because there's so much competition for property in our markets at the moment.
We're about to get the first home buyers coming in because we're now in October when the 5% scheme in.
Does it get any better in terms of higher price activity, or certainly the drivers for higher prices? You're right, there'll be tens of thousands of new buyers coming in to the market, Rachel, and they don't bring trade-ins with them because they're first home buyers. So we're still looking for more supply to match that demand, because it's not, the trade-in buyers that we get with changeover buyers that bring property in as they change and then they buy another property. These are buyers that are coming into the market for the first time and not bringing any trade-in with them, no changeover with them. So the government seems to be reasonably confident, or Treasury seems to be confident it's not going to add to prices growth significantly. I question that, Rachel. Logic tells you that. Sorry, guys, but they are saying over the next 4 years or something. Okay, whatever. That's the get out of jail disclaimer, but I do think this is going to have put more upward pressure on prices, which is more good news for those that are thinking of selling their property, or for homeowners anyway, because it just improves their wealth with higher prices. And of course, confidence is high. Affordability has been improved. We'll talk about that shortly, Rachel, because of course, with lower interest rates, you get to be able to purchase more with a given income because you're paying less for your mortgage, and that's the real driver of higher prices. But as I said, now we're starting to get that sort of FOMO energy happening in terms of people starting to think, gee whiz, we better get in now or we'll miss out, and that's fear of missing out. So let's have a look at the data. Firstly, this is the National Capital City House Price Chart. This shows that we've had 7 consecutive months of higher house prices ending there in September. It does compare, as I mentioned before, the 3-month data set on a month-to-month basis, so you can clearly see the trend there. And since those February rate cuts, the actual rate of growth has accelerated, as we mentioned before, affordability has improved. All capital cities, Rachel, reported increases in median house prices over the September quarter compared to the August quarter, with the exception of Hobart. which has been weaker lately. Hobart's always an interesting case study because it tends to go against the trend of the other capital cities. So it's, I guess you'd call a bit of a nonconformist, that Hobart market, but it was the only capital city to report a fall in house prices over the September quarter compared to the August quarter, down by 0.5%. And it is also the underperformer in terms of annual prices growth compared to the other capitals. All the other capitals are reporting solid to strong growth over the last 12 months. Let's have a look at Brisbane there. Top performer of the major capitals, Rachael, up by 2.1% over the month. That is a very strong result, a monthly result. And this year up so far 9.1% so far this year. I think that Brisbane market's going to hit double figures when we get the final 2025 numbers released at the end of the year, and up over the year by 11.8%. So that just reinforces that we'll certainly get, at this stage, a double figure 10% plus result, maybe even closer to 15% with the current rate of growth. What a tremendous result for homeowners in Brisbane. And over the not so good for first home buyers, of course, Rachael, because there's always the other end of the pineapple up there in Brisbane, and that's the if you're not in the market, you're missing out, particularly with this very strong prices growth at the moment. And Rachael, the last 2 years, Brisbane house prices have increased by 30%. So Brisbane, the top performer. Canberra second there at Sydney second over the month, 1.4%. We have been seeing some strong auction results in the Sydney market. Adelaide and Canberra up 1.2% over the month. And likewise, we've been seeing certainly a revival in auction results in that Canberra market. Now it's translating into higher prices. And Adelaide's been a booming auction market, Rachael, over the past month or two. So again, no surprise, a strong growth there in Adelaide. So these are very positive results for house price outcomes over the September quarter, Rachael, and I would expect that to continue going forward, really irrespective of what happens with interest rates in terms of perhaps remaining on hold, because there's so much momentum in this market. And as you mentioned, Rachael, we've got all those first home buyers coming into the market as well, which will certainly place upward pressure on the budget end of the market. And of course, the other point is this is the spring selling season, Rachael. We're already a month into the spring selling season. We shouldn't be surprised that prices are growing. We're seeing more listings coming into the market, more buyers coming into the market. Of course, the spring selling season releases that end of year focus that buyers and sellers have. In other words, they want to get their property outcomes finished by the end of the year, buying or selling. So that's what energizes the spring selling season. So plenty of positives, plenty of momentum going forward in our housing markets. And the other thing about the spring selling season, Rachael, is we typically see more higher priced properties as a proportion of the market coming into the market. And the thing we should note is that the Melbourne market is typically activated by the spring selling season. The Melbourne market has the highest proportion of prestige properties as a sort of a price mix in their market. It's been missing a little bit, the upper part of the Melbourne market over the last year or two. I would expect, given the revival in the housing market and an improvement in confidence, that we might start to see that upper part of the Melbourne market, as it usually does, start to rise over the spring selling season. But just talking of the Melbourne market, it's performing very well, Rachael, at the moment. It has, of course, been in the doldrums for the last 2 years. It's seen the Perth, Adelaide and Brisbane markets rapidly close in terms of comparing median house prices. You can see there that the median house price in Brisbane is now above that of Melbourne in our models. And these are adjusted models. So that's a really big result there, that Brisbane now has a higher median house price than the Melbourne market. Whoa, that just shows you how strong Brisbane has been. And also Perth and Adelaide are closing in on Melbourne as well. But Melbourne is starting to pick up. It is up by 5.2% so far this year, Rachael. And I would expect Melbourne, in terms of annual prices growth, to have a better year this year, clearly, than it has over the past 2 years in terms of annual prices growth. And as I said, we're still waiting on the upper part of that Melbourne market to pick up. But I do think the signs are there that it will happen over the remainder of the year. But certainly some very positive results everywhere except Hobart, and some really especially strong results. And we need to focus on that Brisbane market to highlight just how strong that is and has been. So that's houses. Let's have a look at the unit market. Again, this is the chart for the weighted average capital city unit price model. What we do here is we take the weighted average, just explaining that, which is the median price averaged out for the number of listings or the number of sales, as a proportion of the whole market. So it obviously favours markets, the weighted average favours markets with more transactions. And of course, the units, particularly that means the Sydney, Melbourne and Brisbane market. So, but regardless of that, it does account for all the transactions through the capital city. So 8 quarters in a row, Rachel, we've seen national capital city unit prices rise. Didn't rise quite as strong as houses over the quarter, but nonetheless, still plenty of energy in that unit market as well, Rachel. So they're not missing out, unit owners, in terms of prices growth. So let's have a look at the results here in terms of capital cities. And hey, do we have to keep saying it? I mean, how greedy are Brisbane? They win the AFL Grand Final and they win the September quarter house price results as well. So Brisbane up 2.3% on top in terms of all the capital cities, not just the major capitals, in terms of that price growth over the September quarter compared to the August quarter, 2.3%. So far this year, Brisbane unit prices are up by 10.5%, Rachel. Over the full year, 60% growth in Brisbane unit prices. And over the past 2 years, take a deep breath, have a look at this, 44.8. That's nearly 50% growth in unit prices in Brisbane over the past 2 years. That's like winning lotto, is it not, to a certain degree? But it's not a gamble when you invest in most instances in Australia's capital city housing markets. And I just thought we'd point out, other than strong growth in Brisbane again, Adelaide and Perth have also had very strong results over the past year and 2 years, but they are smaller unit markets, Rachel, so they can tend to be volatile, and there's not as a proportion of the total market. They have a much smaller volume of units compared to houses. But I just thought I'd point out some strengthening results in that Melbourne market for units, up by 1.1% over the month, which is a very solid result. But so far this year, Melbourne units are up by 6.3%, which means that Melbourne units are rising stronger than houses at the moment. And I think that's reflecting the affordability advantages and therefore the yields advantages that Melbourne currently has in its unit markets, particularly as a focus for investors. And we just have to look there, Rachel, at the comparisons for the median price for Melbourne units compared to the median price for Brisbane. So if we remember, they're virtually the same for houses. Median prices in Brisbane and Melbourne for houses are virtually the same, but Brisbane are well ahead of Melbourne in terms of median unit prices. So that, again, reflects the fact that you're getting a higher yield typically in that Melbourne market. We'll look at rents next week, and that'll validate that. So some good positive early signs there for the Melbourne market in terms of unit price increases. And I think that they'll certainly better the results of the last 2 years in terms of annual prices growth in Melbourne. But it's been waiting a while, Rachel. We've been calling the potential for a Melbourne revival. We've had it this year. So we can feel pretty good about that. And those that have taken taken advantage of the opportunities of that Melbourne market clearly represented over the past year or so will be feeling a lot better about themselves with this very positive prices growth coming through. And just another note on the downside, Hobart again was the underperformer and the only capital city to report a negative result over the September quarter for unit prices, down by 0.2%. Unit prices in Hobart are down by 5.2% over the years so far. But let's point out that's a very, very small market, that unit market in Hobart, Rachel. So it can tend to be quite volatile because we don't get a lot of sales coming through because of the size of the market. So some pretty positive stuff there. If you're looking for a full a breakdown of the September house price information. You can get a full copy. You can download a full copy of the My Housing Market September house and unit price report by scanning that QR code, and it will give you a PDF copy of the full report, including some detailed commentary about the prospects going forward for the rest of the year and the nature of the underlying drivers. So that's pretty exciting, is it not, Rachel, in terms of house price growth? I mean, we told you.
Hot at the. We're seeing the house prices rising again, as you said, Brisbane at a very strong 2.1%. From a buyer's perspective, are we at risk of affordability stretching too far? And is that maybe that interest rate hold is maybe welcomed?
Well, it will be welcome because another interest rate cut would only mean higher prices. So from a buyer's point of view, yes, it's welcome. But most buyers are sellers and most sellers are buyers, Rachel. So what you lose on the roundabout, you gain on the swings, if you understand what I mean. So, and this is the beauty of the Australian housing market, because we have inbuilt stabilisers in our housing market, which means actual affordability is not really an issue, even though we can measure it with other, which some do, to point out, oh, this is an unaffordable market. Well, if it was an unaffordable market, nobody would be buying anything, surely. And this is, as I said, the beauty of our market is that we have inbuilt stabilisers, and those stabilisers are our banking system. Our banks will not allow you to borrow more than 80% of their value of the property, typically, unless you pay mortgage insurance, and they won't allow you to repay more than 30% of your income 25% of your income, in repayment. So there are very strict boundaries around which you can borrow. So it means that you just can't keep going, back to the bank and say, hey, I'd like another $100,000. I've got to get into the market. Prices are rising. No, once the prices get to the point where you're not either earning more or interest rates are lower, you can't borrow anymore. So that's that natural stabilizer. And that's why we don't see the sort of, really roller coaster outcomes you can get in more of a free market financial environment, such as happens in the US, because we have just the four banks and they all strictly regulate their lending finance conditions. And this is a great thing, because what it means is once we get to the point where either our incomes aren't growing to keep up with prices or interest rates aren't falling to let us borrow more, then the cycle starts to ease. Now, it's not because there's anything drastic happening. It's just that we've reached the peak of affordability in terms of what the banks are prepared to lend. So that's a great thing. And that's why we don't see high levels of mortgage defaults here generally. We through the cycles, we typically have very low levels, historically low levels of mortgage defaults. And the only time those tend to rise above very low levels and still at low levels is when we get a big shift in the unemployment rate, because obviously when people lose their jobs, they find it more difficult to repay their mortgages. But even then, that's at the margin, because even the worst of unemployment we get, and, I'm not going to speculate on this, but we only have 4% unemployment now. The prospects of 5 or 6% are still reasonably remote. But even if we did get that, that would still mean that 94% of the population would still be in work. And, Australians do anything to secure their property. So affordability, yes, it's an issue, because what's going to happen if you're not earning more or you're not getting a lower interest rate, you're not going to be able to pay more for your property. It doesn't mean you won't buy the property. It just means prices will start to level out. And that's the stabilizer for affordability. But that's a great question, Rachel. And a lot of nonsense goes on about, Australian property's unaffordable. Well, if it's unaffordable, A, how come people keep buying it? B, how come banks keep lending? And C, why aren't there more mortgage defaults for people who, can't afford it, sort of thing? As we'll see, as we've already discussed, soon, we're going to see a big rush of first home buyers doing anything to get into the market and take advantage of that new government scheme, first home buyer scheme. So let's talk about interest rates, shall we? Because we had RBA, not a surprise, kept interest rates steady over September. They've been waiting really for those quarterly data sets from the ABS on inflation. The next quarterly data set comes out just before the next RBA meeting, which is on Melbourne Cup Day, which I think is the 2nd of November, the week before the September quarter inflation data will be released by the ABS, and that's what the RBA will be looking very closely at. Now, they left rates on hold. If there was an outside chance, maybe, of them cutting rates again, which I don't think there was, because they tend to wait for that 3 monthly data. We did have the monthly data out, which we discussed, Rachel, just recently, and that was a little bit of a shock to some, and also perhaps a little bit of a shock to the Reserve Bank, because in their commentary they said that, and I'll just quote them here, recent data, while partial and volatile, what they're talking about here is the monthly data, inflation in the September quarter. Now, we've got 2 months of that September quarter data that has been revealed. Of course, that's July and August. Might be higher than they expected. But overall, signs private demand is recovering. Indication that inflation may be persistent in some areas. And we know we're talking about electricity there, Rachel, which we discussed in some depth recently. And labour market conditions remaining stable. They decided they'll leave rates on hold, right? So the thing that's surprised the Reserve Bank, and it shouldn't have surprised the Reserve Bank, is that electricity prices are spiking, and that's adding to inflation. Electricity prices are spiking because we've seen the end of the government handout that was announced last year. Yes, we've got another handout, but it's only half what it was last year, and it's only going to go to the end of the year. So that obviously means that's going to put upward pressure on electricity prices, which is a significant contributor to the inflation rate. So the Reserve Bank's saying, oh, we're a bit surprised. Oh, inflation's higher. Oh, well, you shouldn't be, Reserve Bank, because we know that as soon as that subsidy finished, it would have we would be getting higher electricity prices. The government must have known that too. Maybe they were hoping other factors would have kept inflation lower. But I would be surprised if we don't see a big spike in inflation over the September quarter. So that will be the data that the Reserve Bank will have to consider with its decision in November. But this is, as I said, it's sort of narrative has changed a little bit, Rachel. It's like, oh, looks like inflation might be a bit higher than we thought, but it shouldn't be a surprise because we know that was likely to happen when the government's electricity subsidies finish. Now, yeah, it might have been offset by, say, a big fall in fuel or a big fall in other factors, but it hasn't been because fuel is holding steady, the price of oil. So it's certainly uncertain times ahead. But I think if you're a betting person, you would suggest that we will have another surprise for the Reserve Bank in terms of the inflation outcome. But I don't think that's going to have any material effect on the housing market, which is really building up a full head of steam, as we've seen with the latest price data. And another cut would it would obviously accelerate prices growth even more. Well, accelerate it from what it is. Interesting times in terms of interest rates. Yeah, we all want lower interest rates, but we also want lower inflation. And I'll tell you what we really do want, Rachel. We want lower electricity prices, don't we? Because we don't want to be, losing out in terms of the gains we're making with our wages, etc., and our house prices by having to pay a lot more with our electricity prices. So stay tuned here. It will be an interesting period leading up to the next Reserve Bank meeting. But as I said, the main point here, a little bit surprised they were with those higher interest rates. There's our cycle. See, they're steady at 3.6%, the official interest rate, down from the 4.35% peak of last year, and certainly now well below the peak, our previous peak in the cycle before the previous peak back in 2011 of 4.75.
Awesome. So the RBA's kept rates steady at 3.6, as we've said, but we're seeing inflation might be a bit stickier than expected. Do you think we're done with the cuts for the rest of the year, or do you think we'll have another surprise before Christmas?
I think we're done with the cuts. But you can never second guess the Reserve Bank, Rachel. But I do think for them it's risky to be cutting rates when we've got issues over inflation, particularly when they sort of can't justify it as the US has justified it with a weakening labour market. As they said in the commentary, labour market's still strong. So if they were saying, look, labour market's looking a bit ordinary, maybe we should cut rates. Now, they can't say that because that's what the Fed in the US said in regard to its latest cut in interest rates, that they were worried about what was happening in their labour market. Our labour market, by and large, is still performing quite well. Maybe some early signs there of some weakening, but nothing really that would justify an interest rate cut. So I think it will remain on hold, but let's see what those latest inflation figures tell us. Going forward, let's have a look with a drum roll at the latest weekly auction results. So as we've already discussed, it was grand final week in the AFL last week. Congratulations to Brisbane. Wasn't my tip, but, you know, Brisbane is kicking goals everywhere, if you know what I mean.
You got to have the Bronx this weekend, then. You got to have the Bronx.
Well, I suppose, you know, karma is telling you that, isn't it? But there's always the exception to the rule. So let's see what happens. So despite the distraction of the AFL, auction markets were still strong. We'll see auction activity. And the distraction means we didn't get as many listings, particularly in Melbourne. But it's sort of Sydney's turn this week because it is the NRL Grand Final. So we'll see and it is a long weekend holiday in New South Wales this weekend for Labor Day coming up Monday. So we will see fewer listings because they're wanting to avoid those distractions in the Sydney auction market this week, as we had last week in Melbourne. But we will see more listings in Melbourne and some of the other VFL states, or AFL states, if I could call them that. We'll also have more listings coming through. But the markets really didn't miss a beat, Rachel. 1,433 auctions in Sydney. Of course, a lot of those auctions were brought forward to avoid the clash with the NRL Grand Final next week. Still, clearance rate, despite all those auctions, 77.9%, well ahead of where it was a year ago. Just a handful of auctions in Melbourne, 250 auctions in Melbourne. Still a solid clearance rate in Melbourne, 73.6%, 10% higher than a year ago. At Brisbane market, it also had fewer auctions compared to the previous week. Of course, with Brisbane successful in the grand final, there were distractions again that were there that meant listing numbers were lower. Clearance rate a little bit lower in Brisbane, but still around about where we expect that Brisbane market to be tracking. Adelaide is booming at the moment. Its auction market is producing consistently 80% plus clearance rates, which in a consistent sense we measure as a boom. Great results there, even though it had a significantly fewer auctions, as I said, distracted by AFL Grand Final. The same story in Canberra, sort of, but that Canberra market's now, we just expect 70% plus every week, just like we were expecting 50% plus like a year ago every week, and it's well ahead of where it was. In fact, 15% higher than where it was a year ago, that Canberra market. And as we've seen just recently, it's recording now consistently higher prices as we would expect. So the trends are all the same here in terms of the monthly auction clearance rates. They all dip away to start the year and have risen since lower clearance rates there in Sydney. Melbourne well ahead of where it was a year ago over September. On the Brisbane market, also well ahead over September where it was a year ago. Same story for Adelaide, that's now back to the 80% that we had at the beginning of last year when it was Australia's strongest auction market. And the same deal there for the Canberra market, which is now well ahead of where it was a year ago, Rachel. And as is the case of the other markets, we're seeing prices growth as a response to that, as a reflection of that very strong competition for property in our weekend or weekly auction markets.
Yeah, very strong auction market there, Doc. And we're seeing Melbourne having its post-breakup glow, but Adelaide smashing it with an 83.7% clearance rate. Should we be calling it a little quiet overachiever of the property market?
Well, it's been a little strange, Rachel, because Adelaide, as we discussed last year, was very, very strong, 80% plus clearance rates through the first part of the year. Then it fell away quite sharply, the Adelaide market. And it was like that affordability thing that we discussed, because it had reached its affordability peaks because such strong price growth, such strong clearance rates in Adelaide. It was well ahead of all the other auction markets during that period. Did fall away, and it fell away at the beginning of the year as well. It was sort of so-so. But over the last month, it has picked up significantly, and now it's back to where it was 18 months ago as being that ultra-strong, uber-strong boom time market. And it's clearly a boom time market in Adelaide. And I would expect to see prices growth as a response to that going forward. And, it's remarkable. It's remarkable how it fell away. And I think that reflects affordability barriers that started to push buyers out of the market because prices were so strong. But as those interest rates fell, affordability improved and prices started to rise. So it validates our model. And that's why it's very important to keep looking at those auction clearance rates every week. And if you do want to see the latest auction clearance rates, Rachel, as you know, you can see the Capital City snapshots every Saturday night at 6 p.m. on my LinkedIn channel, which is Doc Andrew Wilson at LinkedIn. And on Sundays around 9 o'clock in the morning, we release the full national report, which includes the regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer for each of the capital cities over the previous week. The latest auction market report, there is a QR code. You just have to scan that with your phone, and it will give you a link to a PDF copy of that particular file. As usual, we're going to finish off today, Rachel. We've gone on a bit longer than usual, but there's been so much great stuff to talk about and so many great questions to answer, of course. But we will finish off with our My Housing Market Infinity app. This is the greatest little toolkit for buyers and sellers or those just interested in the housing market. If you click on the link there, or if you scan the QR code, it'll take you to the app, the My Housing Market Infinity app. You have to get a password. The good folks at Infinity will be only too happy to provide you with a password. This is what you get, a screenshot of the greatest giveaway in property, Rachel. That's what it is, let me tell you. All right, so you can scan it for price or rent. This looks at real-time asking prices. So this is telling you what vendors and agents are asking in terms of prices or rents currently in the market, and I mean currently. So you get a sense of what value is in the market at the moment. So you can scan it for prices or rents. We've filtered this for price. You can filter it for regions or capital city region or outside capital city region. We've filtered this for the New South Wales capital city region of Sydney, the suburb of Blacktown. You can filter for house, townhouse, or unit. We've filtered this for house. You can also filter it for the number of beds. So we've got a 4-bedroom house in Blacktown, and that currently has not just we're giving you the median asking price, but also the low and the high. So you have the boundaries, not just the middle part of the market, but also the top and the bottom part of the market. So it gives you a good sense of value through those variables and the number of properties for sale at the moment. So exactly the same thing for the rental market there. What a great asset that is for those wanting to investigate housing market activity in real time, because it's updated constantly. Also it's a boon for those looking at all capital cities in Australia. So all capital cities that have data are reported here. So it's not just the capital cities suburbs. It's all suburbs in Australia. I think I said all capital cities, all suburbs in Australia. And if you're an investor, there's also an add-on here which gives you the top 10 yields on a suburb basis, same breakdowns, same filtering breakdowns. But here you can find the top 10 ranked yields for suburbs in each of the regions. Not only the top 10 yields, but also the vacancy rate, the number of properties for rent or for sale. If you click on the hot links to those suburbs, it'll also give you a map that'll show you exactly where those suburbs are, in case you don't know. So lots of information there. Of course, yields represent the annualized rent. So asking rents multiplied by 52, because we're looking at weekly asking rents, divided into the current asking price. So that gives you the return on investment. This, of course, is a gross return on investment. It doesn't include your personal costs or your financial costs involved. But it's a great way of looking at what suburbs are offering the best return, so you can take a scientific approach to your property decision-making. So, gee whiz, a big day today, Rachel. But next week, we're going to look at September home rents, August building approvals, and as usual, the latest auction clearance auction results. And this is a scan if you want to have a look again at the or get a copy of today's presentation. And there it is. So you can scan that. So thanks a lot, Rachel. you're not in New South Wales, so you can't enjoy your public holiday. But I suppose you'll be glued to the TV watching the NRL Grand Final, will you not?
Yeah, absolutely. Yeah, wow, you put it so well. What a big day of data. That is a wrap on this week in property. We've seen prices defy gravity, rates holding their ground, and auctioneers calling bids like they're hosting the Olympics. Big thanks to Doc Andrew Wilson for crunching the numbers, and thank you for tuning in. I'm Rachael Howlett, keeping you sharp, savvy, and just a little sassy in the property game. Until next week, may your auctions clear and your coffee be strong.
Well said, Rachel. Wow. See you later.
You fucking gone. See ya.